Hello, my brothers and sisters. How are you guys doing? Hope you guys are doing amazingly well. So, in this class, we will see the revision of income from house property chapter. Now, house property consists of either building or land appurtenant thereto. A vacant land will not be falling under house property under the income from house property. Yes, so a building can either be residential house properties or residential building or commercial buildings. A land appurtenant thereto means a building is linked with the land, such as any kind of garden, car parking space, courtyard. All these are land appurtenant thereto. This also is forming part of the house property. Now, this house property, how can we say that this is falling under the head income from house property? If the assessee is the owner of the house property, or assessee is the deemed owner of the house property. So we are unable to understand. Assessee is the owner of the house property means he is registered as the owner. But what is deemed owner means? So deemed owner is mentioned in section 27. 1. You are a lessee. You have been in lease for the 12 years period. Then in that situation, even though you are a lessee, it is considered as you are a deemed owner. But if the renewal is taking place less in not more than 1 year, which is renewal taking place 1 month, 6 months, 8 months, like the renewal taking place, then the 12-year period will not be considered. You won't be the deemed owner. Next, if you are the holder of impartible estate, what does that mean? Sir, your grandfather, your father, through generations, this house property is keep on coming. So the entire family, who is the elderly person, he will generally be the holder, and he will be paying that. He will be considered as deemed owner, and he will be paying the tax. Next, third situation regarding deemed owner, where the, let's say the example, the father has transferred his house property to spouse or minor children. This minor children won't include minor married daughter. So even though the minor children or spouse is having their house property in their name, still the father will be considered as the deemed owner. Yes, but there are two exceptions for this. First exception is where you and your spouse have agreed to live apart. This won't be included. Second situation where, yeah, adequate monetary consideration has been given, then not required. Next, a cooperative society is having a house property in their own name, but they are giving members the right to use the property. In that situation, member will be considered as what? The member of cooperative society will be the deemed owner. Next, even though you are not registered because you have made part payment, but you have got the possession of the house property, then in that situation, still you will be because you got the possession, you will be the deemed owner. These are the situations where you consider as deemed owner under section 27. Yes, so you if you are the owner, or if you are the deemed owner, then this house property will be falling under the head income from house property. And how will you charge tax for this? On the basis of net annual value, NAV. On the basis of a net annual value, you will do the calculation. How we will see in the next topic. But the same house property, you can charge under the head PGBP when, if this house property you're using for business or profession, you're carrying on business or profession, you're using it, it will fall under PGBP, and you can get the benefits of depreciation, you can get the benefits of repairs, rates and taxes, insurance, all these expenses you can claim. But even there is a situation where you're getting staff quarters rent, or you're getting guest house rent, still you will be considered as, still the rent will be considered as PGBP, not income from house. So what are you saying? Even though rent is received, yes, staff quarters and the guest house is used for business purpose. That is the reason these two cases where it will be going under PGBP. Yes, and also composite rent. What is composite rent? So along with the building, you are providing some incidental services or other assets. Even that particular thing will be going under PGBP. Yeah. Next, if the ownership title is in dispute, it is under case law. In that situation, the income tax department will decide who is the owner, who will be paying the tax, until the court decides who is the actual owner. Yeah. Next. So how to calculate let out property under the head income from house property? First, we will calculate expected rent. expected rent to calculate, we have to remember MFS. What is MFS? Mutual fund. That is the standard thing. That's what MF, mutual fund, standard thing. Yeah, standard way of investment. The same way M, municipal value. F, fair rent. S, standard rent. So municipal value, fair rent, whichever is higher, that higher amount you have to calculate with standard rent, whichever is lower. That is the expected rent. Now expected rent and actual rent, whichever is higher, will be the gross annual value. Yeah, minus what is the municipal tax, which will come to net annual value. Then you have to do two deduction, expenditure and deduction under section 24 subsection A talking about 30% of NAV, deduction under section 24B subsection B is talking about interest on loan. So here comes your income from house property. Yes sir, yes. So what do you mean by municipal value, sir? If the for paying municipal tax, municipal authority will determine a value, that is municipal valuation. What is fair in, say, in your area itself, in a similar locality, what is this rent for this similar property? That is fair rent. What is standard rent? The Rent Control Act will decide what is the standard rent. So what is actual rent, sir? Three terms is there. One is how much rent received, and next is how much rent to be receivable minus unrealized rent, that is the actual rent. So what is this unrealized rent, sir? It is to be received, but it is a loss and irrecoverable. He is not paying. For this there are four conditions to be satisfied. First condition, what is it, sir? It is that particular rent should be bona fide. Second condition, you have to vacate the default tenant from your property, and if he is not vacating, you have to take steps, take police complaint or throw away his all the things outside the house. Yes, this step should be taken. Next, that default tenant should not should not be using any of your other properties. He should not be staying in any of your other properties. Fourth one, you have to initiate legal proceedings, file a case against him. Yes, these are the four conditions satisfied, you can get deduction. Unrealized rent can be deducted. Yes or no? Yes. Next, how will this unrealized rent only for the current previous year you can get deduction. For the preceding previous year you're claiming deduction, the current previous year you cannot claim deduction. Only for the current previous year unrealized rent you can claim deduction in the previous year. Yes or no? Yes. Next, sir, how will we calculate the municipal value, fair rent, standard rent and actual rent period, sir? How will we calculate? So, period for the expected rent, how will you calculate is, am I holding the property? Am I holding the property? I have not sold it, I have purchased and I have not sold it. So, how long did I keep this? This is the number of months you will use it. Number of what? This is the period. And what about actual rent? Sir, have I let out? Have I let out? Actually let out. I did not self-occupy. Actually, I have let out. That is the period to calculate the actual rent. Sir, lot of people do mistakes here. All remember this point exactly. Next, municipal tax. Who do you pay municipal tax? To the municipal authorities such as fire tax, water tax, sewerage tax, property tax. Yes, this tax you have to pay on accrual basis along with the payment basis. It has to accrue, and you also have to pay it. So which is this year it accrued, you are paying it. You can deduct municipal tax. Preceding previous year, it accrued. Still you are paying in this current previous year. You can claim deduction. But I'm paying in the current previous year for the future, for in advance. Can I claim? Because it did not get accrued, you cannot claim deduction for the advance payment. Yes, but who is making payment? It should be made payment by the assessee, the owner, and not the tenant. If tenant is making the payment, you cannot claim deduction. Sir, yes or no? Yes. So this is how you claim deduction for municipal tax. Yeah. And municipal and the property if it is outside India. First, you have to know that rent will be received in foreign currency, and municipal tax we have to pay to the municipal authority outside India. We can pay, no problem. But it will be in foreign currency. We have to convert it to Indian currency. How will we convert? In question, either there will be this is the currency, or if question directly they did not give, they will mention the telegraphic transfer buying rate on the last day of the previous year. So what is the, there will be buying rate, there will be selling rate of the bank. Of that we have to take the buying rate, and on that too on the last day of the previous year we have to take it. That conversion you have to make it. Later, okay. So this is how you do it. Next, 30% of NAV. How will you do 30% of NAV? Gross annual value minus municipal tax comes in NAV. Now you have to deduct 30% of NAV. Why do you have to deduct 30% of NAV? Because income tax do not give you any kind of expenditure. Only 30% or so income tax is telling you make any expenditure. You do not make any expenditure on the house property. We do not bother. We only and only are giving you 30%. More than that we are not giving you, and if you are spending less than that you can claim 30%. It's a flat 30%. Yeah. Yes, but this 30% you can claim only and only if NAV is not nil or NAV is not zero. It should be more than zero. NAV should be more than zero. Then only you can claim 30% of NAV. Yes or no? Yes. Next, computation of self-occupied house property. How will you compute self-occupied house properties calculation? 1. Gross annual value for self-occupied property nil, municipal tax nil, NAV becomes nil, 30% no, because it is nil, no 30% reduction. But interest on housing loan you can get deduction, because only there is deduction on income from interest on housing loan. It is a loss from house property, and this loss, a loss from house property under the head income from house property, you can claim deduction and only if you're following old tax regime. If you're following new tax regime, you cannot claim, you cannot get deduction, you cannot set off that particular loss from other kind of income. Yes or no? Yes. And what is, by the way, what is self-occupied property means? Nothing, sir. You are not letting out. That's it. Whether you are staying in that property or you are not staying in that property for any other reason, it does not matter. You are not letting out that property. That is self-occupied property. Now, interest on loan. Interest on loan where the house property, to purchase it, to construct it, or to renew, repair, reconstruct it, I have taken loan. Then for that loan, interest is accrued. Only here we have to see interest has to get accrued. We don't have to bother whether it is paid or not. We have to, what matters, interest has to accrue. Interest has so let out property and deemed let out property, it got accrued, no limit. Even if you are paying 10 lakhs interest, deduction 10 lakhs, deduction is claimed. But for self-occupied property, one, only and only if it comes under old tax regime, you can claim deduction. If you are doing new tax regime, interest on loan, there is no deduction. Sir? Yes. Next, second one. There are two kinds of deductions. One is a limit of 2 lakhs. Next is a limit of 30,000 rupees. So first we'll go with limit of 2 lakhs. If you have taken loan on or after 1st April 1999 and you have purchased and you have constructed the house property within 5 years. For example, you have taken loan. What is the end of the previous year? The 31st March. From this 31st March, within 5 years, you have to purchase the house property or you have to complete the construction of the house property within 5 years. If this condition is satisfied, the loan is taken on 1st April 1999 and this construction within 5 years is done, then in that situation, the limit is 2 lakhs. Otherwise, any other situation for self-occupied property, it is 30,000. So you have taken loan for 2 lakhs and you have also taken loan for 30,000. Okay, you have taken loan for more amount and the interest you are paying is, let's say, 2 lakhs and another interest is the limit is 30,000. So totally it is coming more than 2 lakhs. More than 2 lakhs. Still, aggregate maximum deduction also is 2 lakhs. Aggregate maximum deduction is also 2 lakhs. Yes or no? Yes. Next. You have defaulted in the payment of interest. You have defaulted in the payment of loan. Yeah. Monthly you have to pay loan, but you have defaulted it. Bank will charge the default for the default some interest to be paid. That interest will not get, you should not deduct it. Reason, it's your default, it's your fault in not paying the payment on time, so that no interest. Yes. Next, the loan you have taken for the house property, I have taken another fresh loan to repay this existing loan, this old loan. So for this fresh loan, can I claim deduction, interest deduction, can I claim? Yes. For this fresh loan interest also I can claim deduction. Sir, yes or no? Yes. So what does this prior period interest means? I have taken loan. I have completed my I have completed my construction, or I have purchased. I have done. I have obtained the acquisition. So what is the beginning of this previous year? 1st April. What is this one day before? 31st March. Yes. So this 31st March, and when I have taken loan, what is the interest? This interest is the prior interest, and this I will pay in 5 equal installments. Let's say the interest amount is 5 lakhs. 5 lakhs divided by 5. So 1 lakh. So this 1 lakh, first of 5 lakhs divided by 5 is 1 lakh. So the first 1 lakh installment I will pay when the construction was completed, and then subsequent years 1 lakh, 1 lakh, 1 lakh I will pay, and 5 lakhs I will claim deduction. This is prior period interest. Yes. For this also 2 lakh, if it is a self-occupied property, 2 lakhs limit restriction is also there for this. Next, if interest is payable outside India, you have to make sure that TDS has to get deducted. TDS got deducted, it is deductible. If TDS did not get deducted and interest paid outside India, it is not deductible. Next, deemed letter property. If there are more than more than two house properties with you, and those more than two, where two house properties are self-occupied, no problem. Where more than two house properties are self-occupied, let's say three or more than three are self-occupied, then in that situation, we will consider two house properties as self-occupied. More than two, third one, fourth one, fifth one, how much ever, we'll consider it as deemed let out. We'll consider it as let out. Yes. How will you do this calculation? First, we will do three options. We will, in one sum itself, we'll do three options. First option, we'll consider first one and second one as self-occupied. Third one, we'll consider as deemed let out. Option 2, second one and third one, we'll consider self-occupied. First one, we'll consider as deemed let out. Option 3, first one and third one, we'll consider as self-occupied. Second one, we'll consider deemed let out. So, why are we doing three options? See, there are three house properties. So, here we are doing first house property, second house, third. Three house properties we are considered as deemed let out. Yes or no? Yes. So because of this, we will see what is the total. Let's say the option 1 total is 3 lakhs, option 2 total is 5 lakhs, option 3 total is 7 lakhs. So whichever is lower, 3 lakhs is lower, we'll consider third one as deemed let out. Why? Because the total income from house property is lower, because of the tax also will be lower. That's why we'll consider this. Yes sir. Yes. So how will we calculate? We know how to calculate self-occupied properties. Yes, for 2 we are considering self-occupied property. Only interest on loan we will consider as self-occupied. We'll do everything is minus. But for deemed let out property, expected rent we will do calculation. Expected rent we will calculate and find the expected rent. But actual rent is nil because we are not actually getting any rent. So actual rent is nil. So what is gross annual value? Expected rent is the gross annual value. Minus municipal tax comes NAV, minus 30% of NAV, and interest on loan is no limit. Interest on loan has 2,30,000, no limit. It is no limit. How much ever interest you pay, you will get deduction for that. Yes, this is the income from house property. Next, house property is let out for part of the year and self-occupied for part of the year. Let's say a few months it is let out, few months it is self-occupied. Then in that situation, we'll compute the entire whole year as let out property. Yes, but the let out period is vacant for part of the year. Let out property is vacant for part of the year. It is not self-occupied. It is just vacant. Let's say if, 1 month or 2 months it is vacant. Then in that situation, how will we calculate? We'll see. Let's say the actual rent for 11 months is 1,10,000, and if it has not been vacated, if the rent got the vacancy is 1 month, if it is not vacated, we would have got 10,000. So total it is 1,20,000. So which is, if we compare both actual rent and vacancy, this is expected rent is less. So that's the reason we will only consider actual rent as GAV. Why? Because we did not get a vacancy any money, right? So why should we pay tax for this? See the sum, you will understand. Yeah. Next, actual rent and vacancy both combined is 1,20,000. But expected rent, what if it is 1,80,000? This is more. Expected rent is more. So in this situation, gross annual value is expected rent. Yes, sir. Yes. Then you will do minus municipal tax, minus 30% NAV, minus interest on loan. Next, one portion is let out, another portion is self-occupied. Unable to understand, sir. Ground floor is let out, first floor is self-occupied. So in this situation, will you consider the entire as let out or will you consider the entire as self-occupied? No. Separately for first floor you will consider as let out. Separately for ground floor you will consider as self-occupied. Yes, sir. Separately you will do the calculation. So for calculating the let out, you have to you have to know what is the expected rent, fair rent, standard rent, and all. That will be asked in the question. If it is not asked in the question, based on the floor space, do the calculation. Also the municipal tax, sir. Yes. If the property is co-owned, let's say one property there are two or more owners, that is called as co-owned. Yeah. So in this situation, let's say there are two people, two owners. One has two-third share, next has one-third share. Yeah. So in this situation, how will we calculate? If it is a self-occupied property, interest on loan of 2 lakhs and 30,000 limits for each person. Unable to understand, sir. Self-occupied property, the interest on loan is, let's say, 8 lakhs is the interest. So in this situation, there are two people now. So in this situation, each person will get 2 lakhs. Even though generally you get 1 lakh, because this is a co-owned property, each person will get 2 lakhs, and also for 30,000 also same rule. Yes, separately you will get. And what for a let out property, you will consider the fact that this person, the property is not co-owned, it is singly owned. We'll consider singly owned and do generally how we'll do the let out property calculation. We have calculated the income from house property. Then now we will consider the share. For example, the income from house property is 3 lakhs, and the A as 2/3 share and B as 1/3 share. So in this situation, A will get 2 lakhs, B will get 1 lakh share. Yes, this is how you do the income from house property calculation. And if you want, you can see this sum. Yes, do this sum example if you want. Next, composite rent. How do you calculate composite rent? Other assets and other services is also you're getting along with the house property. Then in that situation, if the other assets and other building is inseparable, you cannot, such as cinema hall, shopping hall, lecture hall, these and all are inseparable. Building you cannot give separately. All this equipments and escalator or lift or watchman, you cannot remove them simply, because this is required in the shopping mall and all. Yes or no? So it's not inseparable. It is inseparable. Then in this situation, in the entire property value rent we are receiving is PGBP. But if it is separable, such as you gave one TV or you gave one light or one fan, it is separable. So in this situation, the building, the house property, the composite rent, whatever services or whatever assets you have given, that is separable now. Calculate separately and put it in PGBP. And for example, you gave 1 lakh rupees is the rent. In that, 10,000 rupees is for composite rent, other assets and other services. So balance 90,000 is for the building. Yes, it will go, 90,000 will go to the income from house property. Sir, yes or no? Yes. Section 25A. Subsequently, we are realizing the unrealized rent and arrears of rent. What is this, sir? Subsequently, we are realizing the unrealized rent and arrears of rent. What is this? Sir, unrealized rent we have already discussed. Arrears of rent is that earlier I have not charged to tax, which means, let's say for 10 months I paid rent of 1 lakh rupees. Now all of a sudden the owner is saying from 11th month it is 2 lakh rupees. I said okay, but for the last 1 year you paid for the last 10 months you paid 1 lakh rupees na. Now we are changing that also to 1,50,000 rupees. So 50,000 rupees for the last 10 months you have to pay right now. That is the arrears of rent. If you are paying, if the person is paying, then for that will be charged to tax under their income from house property. We don't have to whether see now. So at that time he was the owner. Now when I am paying arrears of rent or when I am paying unrealized rent, whether the person earlier who is the owner is the same person again the owner, we don't have to check that. And when we are paying, that is when you can charge tax. That is when you can charge tax, and 30% is the maximum deduction. Whether you do any expenditure, you don't do any expenditure, nothing matters. 30%. So example, 1 lakh rupees I'm giving as unrealized rent or arrears of rent. So 30%, 30,000 is deduction, 70,000 is tax. Total income it will get taxed. Yes sir. So likewise, this is how we finish our income from house property. Yeah, do revise. Please try to understand that what I revise, I know the provision, and what you heard is also important, but recollection is extremely important, which no teacher says you. I am telling you, what I have taught you is amazing. You listen great. Now you can say, oh, I remember everything. No, you have to recollect. No, you have to close your eyes and keep thinking. Okay, for this is the provision. For this is the provision. For this. That's when it hits you. Oh, I don't know this provision. I don't know this provision. You can encircle it, and you can one day before the exam, that particular thing which you are unable to recollect and or which you are confused, you can remember it. This is how you do the revision. Your revision is like that. My revision, I know the provision actually. So I'm teaching you, it's very easy for me. But how will you recollect for your examination? This is how you have to recollect. Okay, for this is the provision. For this is the provision. For this, oh, I forgot this point. I have to encircle it so that and in the next revision and one day before exam, I can I remember I have had some doubt in this. I have to concentrate more on that doubt. You can do this. Yes. So kindly, please. This is one small point. Even if you change, your marks will go extra 20 marks. So do revise. Thank you.